Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by John Bolton from Squirrel. Welcome in again, John. Good to see you.
Yep.
Now, we're going to talk about Auckland property. Now, obviously, you're heavily involved in Auckland property at your mortgage brokerage business and other interests that you have. We've had a couple of big announcements in the last couple of weeks, firstly from the Reserve Bank and secondly from the government around some changes and restrictions. We'll kick off and have a look at the Reserve Bank first and then the government, and then we'll try and combine the two and see what you think they're going to mean. So first of all, I guess from the Auckland perspective, the Reserve Bank announcement, the key one really is that all residential property investors who borrow from banks will need a deposit of at least 30% from October. How big of an impact do you think that might have on the Auckland market?
Oh, look, it'll have a bit of an impact. There's a proportion of that property investment market where clearly it will impact, and that's typically Kiwi property investors, and it's typically the younger ones that are just starting to build up a portfolio. So where they would sort of buy, the property would increase in value, and then they would leverage out the equity gain to buy the next property. It will kill that part of the market in Auckland. I don't necessarily think it will stop those investors. I think you'll see probably a move outside of Auckland. So, and we're already starting to see that. We've got a lot of younger investors now where the prices in Auckland are too high, and so they've sort of started to move into areas like Tauranga, Hamilton, mostly, but also in some of the smaller areas like New Plymouth and a bit down in the South Island.
So that's going to be interesting to watch, and obviously the 10% speed limit on the amount of high LVR lending banks can do is being lifted to 15% in the rest of the country as well. So there's almost an incentive to I guess for the banks to lend outside of Auckland, and as you say, with that property restriction on the Auckland Council area, I mean, there's a bit of an incentive for people to look outside of Auckland. Yeah,
look, I think the incentive's been occurring naturally anyway. I mean, it's staggering just how far the prices have moved up here. And, my observation would be that traditionally in Auckland, the first home buyer was probably hunting around places like Avondale, New Lynn, sort of around the city fringe. They've got pushed further and further out, and what I'm finding surprising now is just the competition and the prices out in places like Henderson, where I've got clients that are struggling to buy at 600,000.
First home buyers, and 2 years ago the 600,000 dilemma was in Avondale, and now we're out in Henderson. So the reality is, particularly with property investors, for the younger ones and the ones that were traditionally buying at lower price points, they were traditionally buying at sort of 300,000 to 400,000. That market's largely disappeared in Auckland now. So a lot of investors have actually started looking outside of Auckland well before this change from the Reserve Bank. I think in terms of the impact, it will have an impact. I don't think it will be as large as perhaps some commentators are thinking. We've got a number of more established investors that have good equity in their portfolios, and certainly with a lot of the new residents, so people that have come to New Zealand in the last 10 years, typically they've got large deposits, and I think at the end of the day that's still a very big part of this market, and I think that's certainly the part of the market that's setting the prices. Now, the Reserve Bank's also said that it expects banks to observe, I guess, the spirit of these new restrictions between now and October, and not seek to expand their high loan-to-value ratio investor lending. It's early days, was announced a week ago, but have you noticed any changes in bank behaviour yet, and do you expect there will be?
Not really, but probably too early to tell. A lot of our clients are already approved, and so obviously banks not going to pull an existing approval, and it's only been a few days really since we've had applications going into banks to see whether or not there's any shift there. I think you can expect to see a shift, and that will gradually occur probably over the next 4 to 6 weeks.
Now, obviously, too, we've had this big announcement from the government, which was quite a surprise, I think, to a lot of us over the weekend. So John Key's saying from the 1st of October, again, there'll be a new bright line test to tax gains from residential property investors, or from residential property rather, sold within 2 years of a purchase, unless it's the seller's main home, inherited or transferred in a relationship property settlement. So that's kind of the first part of it. And then requiring non-residents to have a New Zealand bank account and to get a New Zealand IRD number. So there's a couple of big sort of announcements there. What impact do you see from that?
Yay. It's about 8 years too late though, right? I mean, it's classic crisis management. You know, put it in at the last minute. It would have been good if this stuff was in here before the house prices started surging 4 or 5 years ago. Look, I think it's fantastic. I think it's a really good step in the right direction, and it's quite pragmatic. It will have an impact. I don't think it will have a huge impact in terms of property price inflation and stuff, but from a tax perspective, I think there's been fairly substantial amount of tax avoidance in this space, and it's certainly going to close that down. It's going to be really interesting to see how it impacts on the new resident market. So we always have this debate about offshore buyers, and I've always felt that that's kind of a bit misleading, and sometimes I think it's intentionally misleading because it kind of takes the argument away from probably where the real issue is, which is there is clearly money flooding into this country from overseas, and it's clearly flowing into the property market in the form of deposits. But the reality is that the legal owner of the property is a New Zealand resident, even if the money is coming from offshore. I think with the IRD numbers and being able to start to track this properly, it's going to make, you know, and also tightening up in terms of the anti-money laundering, in terms of making sure that we're clear where the deposit money is coming from. I think that's going to create a lot more transparency in this place, and it's going to allow us to have, I guess, much better debate around what's actually occurring in this market.
Well, it's going to be certainly some interesting changes coming in October. Just to wrap up on this topic, what are you expecting to see between now and October in the Auckland market? I mean, obviously we're going into winter. Some of the latest sales data has sort of slowed a little from the crazy month of March.
Yeah, look, March was crazy. I think April has been pretty strong as well. We're certainly as busy as we've ever been. Look, my view of it is too little, too late. We have this debate around shortage of houses and immigration, but I kind of think it misses the point. I mean, at the end of the day, this is fundamentally driven by low interest rates. And if you think about it, we had a housing shortage and high immigration all of last year. And we didn't see the same sort of craziness that we're seeing in the market at the moment. And in my mind, only two things have changed. The first thing that changed is we got a clean national government, so it removed the political uncertainty, which gave people confidence. The second thing was the Reserve Bank backtracked on interest rates. We went from an environment where they were talking about increasing rates over the next 2 to 3 years to having a pretty limp view of interest rates, and then even more recently a view that interest rates could fall, right? That's all that changed, and so I think fundamentally what's happened in this Auckland market is that the population's taken on a view that interest rates are going to stay down at this sort of level for the foreseeable future, and it's given them the confidence to just go out and buy. Yeah. And I think the lack of houses and the immigration, sure, they're part of the story and they legitimate it, but this is purely about printing money and low interest rates. And this is happening right around the world. This isn't a New Zealand phenomena. It's happening everywhere. And Germany is an interesting example where, for the first time in decades, they're seeing house price appreciation off the back of all this money that's getting printed. So this isn't a purely Auckland thing, and I think sometimes we forget that.
Yeah, absolutely. Well, thanks a lot for that, John. That's John Bolton from Squirrel, and I'm Gareth Vaughan at interest.co.nz.